I'm going to be showing you one of my favorite option trading strategies. This is a reversal strategy. So I use this to tell whether or not the market's in an uptrend or a downtrend and get profit targets at the same time. So it's an all-encompassing strategy. It doesn't happen every single day, right? This isn't something that you can use as like a day trading scalper or whatever. But if you want to make 700% profit, as I did on this trade a few days ago, then make sure to stick around with this video. I'm going to explain everything about this strategy, how it works and how to find it, and most importantly, how to actually trade it. So if you like videos like this, give me a quick thumbs up and leave a comment down below if you have any questions during this video, and I'll be happy to answer them back to you ASAP. You'll never find a simpler reversal trading strategy than this one because this just uses basic support and resistance technical analysis. So it's very easy for newcomers and beginner traders to understand because they don't need to have crazy indicators, crazy formulas. It's very simple, just levels that you're trading off of. And just to show you that I'm not talking from hindsight, here's the actual option trades that I took a few days ago on SPX, where I was able to buy call options with an average price of $3.30 per share. And I sold at my highest price at $21.90, which is just around a 700% profit in a single day on just one trade. And the beautiful thing about this setup is that it doesn't happen really fast. I trade primarily on the hourly chart. I was actually planning for this trade on the Friday leading up to this trade, and I took it on Monday. So I saw it ahead of time, let my people know, and it finally came through and it made an amazing bounce. And the beautiful thing about this strategy is that because I primarily use the hourly chart, it's not like a super fast reaction. You have to scalp it right away, right? I saw this setup on Friday, as you see on this screenshot. I let people know about this setup, and then it happened on the following Monday. So there was technically 3 days to actually see this setup and plan for it. So it's all just a matter of knowing what to look for, which I'm going to teach you in this video, and having the patience and the discipline to wait for that perfect setup and then execute it when the time comes. So overall, for a stock that's in the downtrend, right, that just means that the price is falling down. It might have a bounce upwards, but overall, it's going to keep on making lower highs and lower lows. But in general, the main rule is that as long as previous support holds as new resistance, so you have it do something like this, where that's the resistance line, as long as the stock bounces up but holds against that, it should keep on downtrending, right? And then for an uptrend, it's the same exact thing, just flipped around, right? So you have a stock that's uptrending. It might have a big spike. It might have a pullback. But overall, it's going to make higher highs and higher lows. And once again, in general, as long as that previous resistance level holds as new support, like this, where it pulls back and bounces off it, it's overall still bullish. So this is a very easy way. This primarily works if you're looking at SPY or SPX on the hourly chart. Just plot off some simple levels, and then you can tell, is it uptrending or is it downtrending? However, like I said in the beginning of this video, this is more of a reversal trading strategy. So what happens, say that we are in a downtrend. So the stock market looks something like this, where it pulls back down, bounces up. And don't worry, I'm going to have an actual chart showing this. I just want to have the quick kind of breakdown. Say it pulls back on down, and then you're expecting, all right, great. As long as this previous support holds as new resistance, it should be bearish. But what happens if the market shoots up and it breaks out of that trend? Well, that is the start of a reversal. Now, there is something very important about this, right? And this is going to turn into an overall kind of pattern that you can see. You guys know I don't really like patterns, but this is one that makes a lot of sense from a psychological perspective, which I'm going to explain. So this is the start of what we call a head and shoulders, or in this case, an inverse head and shoulders. So from here, this is a big reclaim above that support line. So now what you should assume is that, okay, great, this is now breaking back above, it's looking bullish. And now as long as it can pull back and hold that support line, it is in an uptrend. And then of course, this also happens for uptrends, right? So overall, say stock is uptrending, it should be bullish as long as it keeps on holding previous resistance as new support. So I'm going to draw that level right here. But then let's say, what if this stock has a big sell-off and breaks down? Well, now you should assume that the stock market or the stock itself is reversing. And as long as it bounces up and rejects that point, that is actually a really good entry to take shorts on. So that's just the overall background of the pattern. Now we're going to jump into an actual example on SPY, showing you how I saw this setup in real time. So here we have the hourly chart of the S&P 500, the SPY ETF, and I'm just going to go through and show you how you can tell that this is in a downtrend, right? So first of all, you can kind of see just overall it's trending downwards, right? But more specifically, if we go in and use the line chart, because it makes things a lot easier to see, if we go in and start marking off levels, right away, right here, you can see there is a big level of previous support right there that acted as resistance. So now we know that it is in the downtrend because it broke support and it bounced up and is rejecting it. So now we should assume that, all right, as long as it keeps on holding previous support as new resistance, it is in the downtrend. So if we just keep on drawing levels on the way down, next main one I see is like kind of right here near 442, this kind of support area. You can see it bounced up. It had a bounce, but overall rejected. So it was still in the downtrend. Once again, keep on going lower. You have this level down here near 439, 440, and it just had a big dump all the way down through it, never even retested once. Then once again, we had one more level right here at 435.70s. But if we zoom into this, you can see something interesting happened where if this was still truly a downtrend, then it should have sold off. But then when it bounced up, it should have held this previous support as new resistance. But as you can see, it didn't do that. It actually kind of broke back up a bit, actually started holding it as new support, and then went for a little run into the close. But this was the first time, and I'll kind of show my screenshot of my chat room where I mentioned this. This was where we actually saw the market actually reversing. But I mentioned that, hey, if this is a real reversal, as we kind of referenced back to the chart that we showed before, what we should see is we should see a big spike up. And then overall, it's going to have one last pullback that's going to retest and hold this previous support as new support again. And boom, you can see exactly right there. That's exactly what happened. So the most important thing with option trading on SPY, if you're going to actually trade the overall trends and not scalp it, is that SPY in the market moves very, very slowly. So you can see these patterns form ahead of time, right? Once again, I knew that the market was in a reversal on Friday, but I had to wait for the right time to actually take the right trade. And so if we kind of zoom out, you will now see more of that pattern of what I showed in paint, where like you have that left shoulder, you have this head, and then you have that last right shoulder, which is the actual entry price. And as you can see, the market pretty much bottomed off of that perfectly. There was some movement off it, but overall it was a very, very perfect bounce. That's overall how you get the entry price, right? You want to look for these head and shoulders or these inverse head and shoulders, and you want to plan your entry to be where that previous support was and use it as new support. As far as profit targets, the best level you can use is just go back to the hourly chart and say, hey, where is the other previous support levels? Here we can see that this area over here near 439, that is a previous support. So that is a very good profit target to take. And you can see during this day, SPY bounced from 435 to that level and overall rejected. So that was a very, perfect range that you could trade and make 700% on a single trade. And using all information from the past, right? This isn't hindsight trading. This is actually legit, actionable live trading that you can do using simple support and resistance and just having a plan and executing on it. Now, as far as a stop loss, I mean, it's kind of hard with options because especially if you're trading 0-day expiration, there's like almost no chance to like actually stop out with a real level. You just have to kind of take the entry. Overall, with my option trades, I plan them in the sense where I'm okay if it goes worthless, just in case everything goes wrong. But in the perfect world, the stop loss, so like if you're trading stock, would just be the break of this next support lower. But with options, it's a bit different. I'm not going to go too far into it because that's a whole nother topic. But in general, just see if it bounces, wait for the hourly chart candles to close. And if it just starts looking weak, just stop out of it. Once again, all of my options trades, I plan them in a way where I'm okay with it going to zero. So that means I don't go in with all of my account size, right? Because that would just be devastating. I only risk 2% of my account towards any single options trade. So yeah, this is just one example of the strategy working, but I have other videos that showcase other examples. And trust me, this happens not just on SPY, but on any stocks, right? So if you're looking at any stocks and you're looking for these head and shoulders or these inverse head and shoulders, look at the hourly chart, mark off your levels, and then wait for that actual break of the trend. Don't chase the initial breakdown, right? Like once again, you don't need to chase this, or you don't need to chase this market open either, right? You can wait for it to see, okay, yeah, it's bullish, it's breaking out, and then wait for that pullback to come. And if the pullback doesn't come, then it was never a trade in the first place. So no big deal, just wait for the next one. Here's another example of the S&P 500 doing the same exact pattern, forming a bottom. This is a bit more of an extreme example. And this was actually when the market made its hard bottom at 350. So if we look back at this chart, right, we know it's in a downtrend. So now we just have to mark off some support levels. You can see here, there's a big support line right near 356.40s. And on this day, the market had a big sell-off, broke down through that level, right? So if it was truly bearish, it should have bounced up and held that as resistance, but it didn't. It had a massive spike up, went all the way to 366, up like 10 points. Now, once again, you don't want to chase that initial spike. Now with that spike, you can see, okay, the market's reversing. So in the following days, I'm going to plan to buy that pullback and buy calls into that previous support level as new support once again. And as you can see, if we go back to the next day, the market had a perfect pullback right into that line. And then from there, never retested it from then on and went up to 400 plus where it is now. So yeah, this pattern does work. Like I said, it does not happen every single day, but if you wait for this setup to form, you can have very easy and profitable option trades on whatever market you're trading, whether it's SPY, whether it's Facebook, Apple, Nvidia, Tesla, doesn't matter. This pattern happens everywhere. So we looked at the actual setup, we looked at the pattern itself, but we never really explained why this works. So I'm going to do my best to explain the psychology behind this in like 2 or 3 minutes. This could be a whole video on itself, and I have many videos on my website talking about this, but I'll do my best. So let's think that you're a buyer, right? So you see this market is uptrending, you want to buy it. You see a breakout right here over to new highs, and you say, okay, great, the market's bullish, I'm going to buy it. So you buy above this yellow line. Market goes up and up and up. It looks so great, but you don't lock in any profits. And then the market pulls on back down, right? But you're like, okay, well, that's okay. Because as long as it holds previous support as new resistance, then it should still be fine, right? But then you see it has this big sell-off down, and now, oh my gosh, you're in the red. Now you're panicking, right? You are stressed out. You want just any bounce to get to sell back in the break even, right? That's your goal. You just want to recoup your loss. And as soon as you get back to zero, you're probably going to sell it, right? You're mainly because you don't want to be under that pressure or that pain of seeing that red unrealized dollar amount in your account. So as soon as it bounces back up, you're more incentivized to sell it. And that's going to cause selling pressure on the stock. And that's going to influence the stock to likely reject that point. Now, that's just you, but imagine the millions of traders who are all acting in the same exact way and all have the same pressure points, right? So that's why you tend to see, whether it's on an uptrend or a downtrend, whenever there's a failed breakout or a failed breakdown, those are just traps that are formed. And whoever is trapped in that is going to be more incentivized to get the hell out whenever it bounces back up to their break even. So that's a very quick kind of breakdown. There's so much about trader psychology that I would love to teach you, but we cannot do it in this simple video here. I do have a full 1-hour video course talking about everything about trading when it comes down to data-backed confidence or trader psychology or how to even make a trading plan. Click the first link down below in the description to get that sent to your inbox right away, no strings attached. And if you enjoyed this video, once again, be sure to leave a like for the YouTube algo. If you have any questions, drop them down in the comments section. I'd be happy to help you out. And I'll see you in the next video.